Hey, what's up, DeFi Chads? Welcome back to Revanchist Wealth. I haven't done a video in a bit, so I want to keep the videos consistent in this channel, so I'm popping one up today. We'll do a quick, harvest of our revenue and a quick checkup of our portfolio. And what I really want to talk about in this video is about the short-term flows. We've talked about the theory and stuff and the model of validating blockchains, but who's buying right now? Why is the price going up so much? So I want to kind of get into the mechanics of that, why I think that's also bullish for our investment thesis, on Ethereum and stuff. So we will get into that, and then we'll talk about what's driving the current market price higher. All right. On the flip side here, just harvested about $1,000, paid 1,000 off. Last time we got it down to 135K. We paid 200 bucks in interest, earned $1,000 or net $800. We reduced on our debt. In terms of our leverage position, ETH is around still like 4,300, 4,357 currently on Labor Day. And we're just holding on to our position. Like I said, we expect it to go up and cross 5K soon. And part of this video is talking about what are those short-term or medium-term flows that kind of support our thesis or expectation that this will happen. All right, so let's get into the meat of this video. I have here the ETH chart. And what have we observed with Ethereum and even the wider crypto market over, let's say, the last year or the last 2.5 years? We'll see that Ethereum kind of did okay, up until like the beginning of this year, and took a dive down to like 1,500, which is pretty low on the lows for the Ethereum price range in history, and has gone all the way back up to all-time highs, right? It's made all-time highs in like the past week or so. So, what happened? And, also comparing this, like I said, to the wider, crypto market, and we'll just take Bitcoin as like the substitute for the crypto market, and like the bigger position or the bigger coin. And you can see that the ETH BTC ratio has been decaying kind of monotonically for a good like 2.5 years, like I said, and now is on the uptrend again. And why, what could explain this kind of short-term or medium-term price action? And I'll get into what I think it is. So, in terms of what is currently driving Ethereum and Bitcoin price, I think the key thing that happened was, past 2023, getting into 2024 and beyond, it became increasingly clear that first Bitcoin, and this is important, first Bitcoin was blessed by the SEC and even the previous Biden administration, which was pretty hostile to crypto. Just in terms of like court logic and stuff, they had to kind of admit that, hey, Bitcoin is a mature market. There's, not much provable manipulation that goes on because the size is so large and it's such a global liquidity asset. And so kind of the SEC was forced in court to kind of acknowledge that and allow certain vehicles to exist. And now with a friendlier administration, other things have changed, right? And I think actually to make the point, both Bitcoin and Ethereum were argued in court to kind of have these properties of a fair market, or assets has a fair market, commodity market kind of. And thus there was the ETFs, that were allowed to go through and be listed on, the stock exchanges in America. So Bitcoin was blessed first and Ethereum second. And I think that is, TLDR for the rest of the video. That is what I think caused that first decay and then now rebound. And there's essentially just TradFi money understanding what's going on with crypto and like where the ball is going to go and kind of front running that. Michael Saylor did it originally with Bitcoin. So Bitcoin had what I get into as digital asset treasury companies. This is like a recent phenomenon. And then like you can think of Bitcoin and Michael Saylor, who's like, who had a company called MicroStrategy and then like was a big kind of in the .com bubble era, like a big tech company. And he has turned that company into his like personal vehicle or like his vehicle to kind of own as much Bitcoin as possible. And in the process of doing that, made a, this is before the ETFs and before you could buy Bitcoin on stock exchange through like Fidelity or something. He was like a proxy asset to Bitcoin. So if there was TradFi money that wanted to bet on Bitcoin, but they weren't able to because of regulatory stuff, regulations and mandates and restrictions on their capital that they manage, they couldn't allocate it. So MicroStrategy, that company that Michael Saylor had, became a kind of proxy asset for Bitcoin. And then this kind of idea that, hey, there's this private company that seeks to stack this commodity asset on their balance sheet. And, kind of that's their whole mission. And obviously to make money off of that. And then other people, the market at large, will like invest in that company and seek to own more Bitcoin. And if you kind of invest in a person that's good at like buying or getting Bitcoin, then you can understand how that's like a lazy investment for someone who's like, all right, I don't understand what this is. I want to kind of outsource that thinking to someone else. Michael Saylor seems like he understands Bitcoin, and he's executing aggressive strategy to accumulate. And I can see that on his balance sheet. He's accumulating, successful at accumulating it. So I'll invest in his company's debt so that I can kind of by proxy own that Bitcoin by being on the balance sheet of a company that I own stock in or interest in. The other important thing is now that with the more friendly administration, the banking rules have changed. Previously, part of the hostile actions by the Biden administration was like saying, oh, hey, bank, or hey, financial firm, or hey, even corporation, if you have Bitcoin or Ethereum on your balance sheet, that is not an asset. You can't count that as an asset. That is actually a liability. And therefore, even if you go buy this Bitcoin and Ethereum, you can't treat it as an asset on your balance sheet. So obviously this becomes very unattractive to most public entities or any, kind of entity with balance sheets and accounting, right, and books. So people didn't have it on, like they would go through Master or something, or MSTR, MicroStrategy. And stocks are fine to count as assets, right? So that's like a loophole that was used. Now the game has changed. Now the administration now the government says, hey, you know what? Actually, these are high quality assets or good assets with a lot of liquidity. You can count them as assets, legally speaking, on your balance sheet, and that's no longer like not kosher. So now there's a bunch of this change allows the copying of the MicroStrategy strategy for other companies that looked at Michael Saylor doing that for Bitcoin and was like, hey, that's a good idea. MicroStrategy's price, went up by 30x. Bitcoin only went up by 11x. So isn't this a great vehicle to like for money that's out there to come into these new crypto assets and perform better than just holding the spot asset? So that's the idea behind it. And now you can see Ethereum treasury companies like Sharplink Gaming and Bitmine Immersion Technologies. These are just companies that were kind of just taken and then like, okay, now you're a Ethereum treasury company or a Bitcoin treasury company. And there's a actual dashboard that, ETH folks have created to track this kind of company activity. And you can see there's like a bunch, and there's some at the top with a huge amount of Ethereum, like billions of dollars of Ethereum. And they keep raising money, right? So they, if I go back to this concept map, what it's showing, or what the idea is trying to get across, is like this company is using its shares and ability to take on debt or raise capital and use it to buy this asset on their balance sheet. And then once they publicize that, the TradFi capital, like the family offices or pensions or mutual funds that have like certain investment mandates or other constraints, they can buy the stake in this company and kind of by proxy own this commodity crypto asset. Um, Other assets, you'll see this, if you dig into this, you'll see that there's assets or DATs, digital asset treasury companies, for stuff like Solana and like whatever other shitcoin you can think of. Sure, they can try it, but this is the key ingredient, is like being able to count them as assets, and having large liquidity for it. So if we went back to our, our kind of model here, right? You can see that Solana is like 50 billion a week in liquidity, whereas ETH and Bitcoin, they're like closer together in the hundreds of billions a week in global liquidity. So if you were to choose between these three as like a treasury asset company, is like, what am I going to be the accumulator for, right? Where's the demand? I'm going to choose these two before I go here. And the people that start here are much riskier propositions in terms of this kind of company that services this demand, because there might not be that much demand for institutional buys of Solana versus like Ethereum or Bitcoin. Especially because once you get into the institutional size of portfolios, right, they need large liquidity in order to like even get in, right, or allocate at a price that doesn't move market. So going back to our model here, these treasury companies are like leveraging like trillions of dollars in like boomer money, quote unquote, right? Like people who don't give a shit about crypto, didn't understand it. Now they see that it's a large market cap, and like if you're like an investor, like sure, you can be like, oh, crypto is all that fuddy-duddy nonsense that the kids are into these days. But once it's like bigger than like the economy of the United States, which like crypto market cap in total, actually it's not bigger. It's like bigger than like the U.S. government budget. I'd say like it's like two trillion, 2.5 trillion market cap, and now it's like actually around 4 trillion. So a third of the U.S. economy. Obviously, if you missed that, then you kind of feel like you're not smart now, and want to cover. You're like, okay, obviously I was wrong. Maybe I should allocate something to this. How do I go about allocating this? So there's a bunch of sidelined money, let's say, in the TradFi ecosystem. They see what's coming. They see the Ethereum story. They see the Bitcoin story, and they see that it has been successful in so far as in like the market cap and stuff, and as well as like use cases like stable coins and stuff, especially stable coins for the Ethereum part. So then all that money comes in, and then that's why you see the price going up a lot. And the Ethereum stuff just kickstarted months ago. That's why that's been happening. And then Bitcoin's been happening for years. And then Michael Saylor's really ramped up how much debt he's taking out under MicroStrategy. And so that's why Bitcoin stayed higher and float and reached new highs, while other assets didn't. And Sol BTC and ETH BTC, those ratios decayed over the last 2 years. So now we see Ethereum getting its time in the sun, and that's what's like I said, been happening. Okay, the other part of this, in terms of, I mentioned this is like uniquely bullish Ethereum, even though this like type of kind of financial engineering or like company setup, corporate setup, is applicable to any treasury asset, right, like Bitcoin or Solana. Why is it uniquely good for Ethereum? I think here's the why. Ethereum, A, is a productive asset. So Michael Saylor, when he bought Bitcoin, all he could do with that Bitcoin, unless he wanted to hand those Bitcoins over to a custodian and another person that would take it as collateral for loans or more loans or money to do stuff with, to get a yield, he couldn't do that with Bitcoin without trusting some other party with his huge stack of Bitcoin. So all he could do is treat it as a pet rock. And that's good in some ways, and bad in other ways, in terms of not, really, it's just like basically a Ponzi scheme, right? Where it's like, okay, hopefully this keeps going up. My company is going to accumulate this because we all think it's going to keep going up. And then, I'll never sell, or like I'll use it as like a treasury asset that I can borrow against and stuff. But it's much harder, and it's not as easy to do with Bitcoin as Ethereum, where ETH has like a DeFi economy on top. And we'll go into like lending markets on Ethereum and stuff like Aave. You can see has 25, $27 billion of loans. And this is like interest bearing loans, right? People are paying interest, and there's activity going on. So when these treasury companies do this for ETH, not only will they send the price of the asset up, which will also help this economy on top of Ethereum, but they will have this Ethereum to put into stuff that we do, right? So I just showed you how I do DeFi on Aave and stuff to kind of improve my returns investing in Ethereum, right? Having a lot of Ethereum. I borrow against it. I buy other stuff. I provide liquidity, earn fees for providing liquidity. Those are all activities that these treasury companies can do with their billions of dollars of ETH, right? And then that yield can meaningfully provide some kind of like profit on the books, right? And yield on books that keeps this virtuous life cycle going, and have it be more sustainable than what's going on with Bitcoin or any of the other like downstream third, fourth, fifth biggest assets in crypto, right? Like Solana, etc. Okay, so great. Ethereum DATs, these companies, for Ethereum treasury companies, they are more sustainable than the Bitcoin pet rock, Michael Saylor's, right? But the other thing that these companies using their Ethereum in DeFi is it juices activity for the key protocols and primitives on Ethereum, like DeFi primitives, like Aave, like places where you can borrow against ETH permissionlessly and without trusting anybody. People who are looking for interest on stable coins or dollars or any other fiat, they will be happy that this is happening because, let's kind of figure out what would happen if, let's say, let's go to Bitmine Immersion Tech here has the most ETH, or 1.8 million ETH, or around $8 billion. And what happens is that $8 billion, when it's put into, let's say, Aave, and they, let's say, borrow $1 billion off of Aave, right, at like 5% interest. And then they use that $1 billion to do something to get yield, right? Like LP ETH USDC, or, create a product, whatever that you can think of, buy a stock or speculate on something else that makes them money, or other operations that makes them money, and helps them get more ETH. And while they do that, they're paying interest, right? So folks who are depositing USDC on Aave, they are, getting the interest that this company is paying. And thus, this is a virtuous thing for the economy on top of Ethereum, right? More money comes in, more demand comes in, and there's just other people who can have a better user experience. They have a better interest rate, or they get more money, because there's more liquidity and money sloshing around in the system. And just to give you an idea of this, right? Aave, for example, Aave is like the 30th biggest bank now in the world, with like $70 billion kind of deposited in. And it's getting like $123 million in fees. Its annualized revenue is $123 million. And it represents like 67% of like DeFi lending. So if, Bitmine and these other folks come in and deposit, 10, 20, $30 billion of Ethereum, borrow money against it so that they can get a yield and do activities on Ethereum like LP, right? And then they'll end up providing liquidity. So you can see how that money gets kind of used in all these different places, and that, like, just to use an old economics term, or a classic economics term, the velocity of money on the Ethereum economy increases There's more stuff to do. There's more liquidity, more everything. And this drives the fundamentals of Ethereum, the network, right? Other users of Ethereum and its apps now have a better time because of this additional money coming in. And when more liquidity comes on chain, it attracts even more money, right? So in terms of this, for Bitcoin, like Michael Saylor's thing is a Ponzi. For us, it's less of a Ponzi because we're actually improving fundamentals of our product. And our product is doing productive things. It's, providing the means and rails for these permissionless stables and fiat to be traded. It's allowing people to borrow money for market rates without involving a bunch of suits and with, doing it in their pajamas on the weekend at 3 a.m. or something, right? That's all possible with DeFi. And as this grows, and as other, like stable coins and stuff grows, there will be a lot more of this TradFi capital that comes in, and they'll either choose a treasury company or they'll kind of be grown-ups and and custody their own Bitcoin or Ethereum and buy spot, buy outright. Hold it like Coinbase does, or just buy the ETF or something like that. So that's where we see the rest of the money coming in to make our price targets reality. And in terms of actually price targets, I know I said in previous videos I'd give out some. I think realistically, this cycle, Ethereum goes to around 15K, 10 to 15K, I think is the target. I will be selling stuff before then because I have a progressive de-risking curve since I've been holding since ETH was $100. So for me, it'll be different, but for other folks, like that's what I expect. Bitcoin, I expect it to like kind of peter out at 200K, 250K maybe, and Solana, I expect to get to like $500. And I'm that's actually like it could get to 1,000, but I think like that's like unrealistic. It's kind of like doing math on that. So those are my realistic price targets for the cycle. This is the mechanism which I think kickstarts it and is the reason why I think people will see the price go up. Yes, the models are still true that we talked about. Those are general models on why any human would value, objectively value these assets. This price increases because many people have realized this. Big money has realized this. And are making their moves. And we're seeing those moves play out on our charts. All right. Hope this was helpful for you guys to understand kind of like the short-term market dynamics. And we'll talk more about our thesis and position as stuff evolves. All right. Thanks, guys.